All right, I hope everybody had a wonderful spring break. Girls had a nice vacation. Their skylights down to Kansas, so yeah. Overtime though, doggone it. It's a heartbreaker. I listened to that game. So, yeah, you guys. Hopefully, you had all your decisions in before last night. It looked like everybody had uploaded decisions. So this morning we processed round 3. And we'll kind of go through it a little bit and then see who the winner might have been. So if you guys can't figure that out. There were a couple folks, I think, in here that had emailed me over the break, and maybe they were having difficulties getting into the CompXM.
Yeah. Won't let us even click on it.
It won't even let you click on it.
Yeah.
Is that for everybody?
Yeah, let me put in my passcode and all that, but that was it.
Really? Well, let's go take a look at that first then. That's got me kind of baffled then. Oh. Okay. I may have to, and I'll do that then afterwards. I thought that I had added the CompXM. I have to click a couple buttons to make sure that it's associated with this game that we're playing, and perhaps I haven't done that, so that may be my error. So we'll go through this round, and then, like I said, this take me 20 minutes or half an hour maybe at most, and then that'll give me time to go ahead and get that added and then let you guys try it and make sure that you guys can get into that CompXM. So my apologies if that's the case. I don't know why I didn't notice that. I thought I had set it up as the problem. So
You know, if you just don't want to use it, we'll be okay. You decide just throw it out the window.
yeah, you know, we've got this fall we've got the assessment folk coming in though, and they actually like to look at the data that comes from this. So I know, unfortunately. So
All right, just trying to help you out.
and I appreciate that. If it were up to me, I wouldn't care about the CompXM, honestly. But
You're a busy guy.
we've got the assessment type folks that think that, you know, it's kind of like Common Core. They think that that's the next great answer to college education. So anyhow, don't get me going on a political commentary up here, or I might get carried away. Let's talk about the round instead and see how everybody did. So it was interesting. There's a couple things I'm wondering if folks really meant to do it or if it was an error in terms of a few decisions, and we'll take a look at a couple of those.
Don't make the sound of that.
Yeah, it's a couple of weird things I looked at, and especially compared to last round, I kind of glanced and said, oh, that's a little different. I wonder what the heck happened there, as my memory started to kick in from a week and a half or 2 weeks ago, I guess it would be. So.
Set. Yeah. But it worked.
Leverage. Every team except Andrews had leverage that exceeded the amount that I've got in. Okay, a couple of them are pretty close. Digby was pretty close. That's the computer team, right? But they're still over, so they're going to get dinged for leverage. Every team will get dinged with the exception of Andrews for leverage. ROE, we see some decent ROEs across the board, really. Baldwin's the only team negative, and just slightly. They had just a very slight loss. Which round did you guys win? Last round? And then you went from winning last round to having just a small loss this round. So, okay. We'll try to figure out why. Emergency loans, look at that. Every team but Digby and Ferris ended up with an emergency loan, and each of those emergency loans is sufficient to cause a dinging, if you want to call it that. You'll get dinged 5 points for those emergency loans. Sales, that's interesting. We go from the high, which is Team Erie of $192 million, to the low of $110 million for Team Chester. Interestingly, though, then when we come down and glance at the profit, Digby had the highest profit, with just slightly less sales than Team Erie. But I glanced over at Team Ferris, and with just 114 million in sales, not that much more than the least sales, which are 111 there. And yet they had the second highest profit behind the computer team. That's, holy cow, what, 75 million difference in sales? 77 million, am I doing my math right? And yet, in spite of that, they were able to have a bigger profit by almost double Team Erie. So 2/3 the sales and almost double the profit, that's pretty impressive. And how do they do that? Your quick glance here just shows you, right? Contribution margin, 8% difference, and a SG&A margin, that's a good 5% difference. So a good 13% difference, right? So on 115 million in sales, 13%, you're talking about a pretty significant amount of money right there. So that's the brief explanation. Obviously, getting into some of those details is going to be kind of important as we go down this a little bit. But some pretty good ROEs. 12.3 is a good ROE. Ferris 17.4 and Digby, our computer team, 18.9. Even 8.9 is nothing to sneeze at. That's not a bad ROE if you're an investor. Obviously, you take the 18.9 first, but 8.9 you're probably not going to complain too much about if it's a one-year thing, especially. Interesting over here when you look at Team Andrews, an SG&A to sales. I don't know that I've hardly ever seen one that low, 3.4%. So something happened there. That might be one of those things where I said, I don't know if that was purposeful or if that was a mistake, but huge decrease, and we'll see why, as we go down through the various segments. The contribution margin, I'm not sure. I hadn't looked this morning. I didn't get enough time to look at that and see what the issue was there with the 23.7 contribution margin, but that's low. Everybody else is over, well over 30. That's pretty good. Here we are in the third round, and everybody's pushing plus 30. I wouldn't doubt this next round we'll see some teams get over the 40% mark, maybe on contribution margins. Kind of see. Always got to see how the competition goes and what's going on there, but wouldn't be surprised. Stock market, earnings per share. The computer team. You guys let the computer team jump in here. Daggone it. I still predict by the end of the game that you guys will make a nice move on the computer team, and collectively you guys will crush the computer team. So that's my prediction. I'm sticking to it. What's that?
I said, I don't think we're going to beat Big Blue.
Big Blue?
Yeah, the old chess computer.
Oh, I don't know. The Watson or whatever? Typically, at least one student team will soundly beat the computer team. I'm predicting that we'll have several teams that actually beat the computer team, and that it's going to whimper in defeat maybe at the end. So we'll see. Little debt. We got some teams borrowing some long-term money. You can see that there just at a glance. I haven't broken it down, but you can see at a glance that there's some long-term money. Obviously not enough, because we had emergency loans by 4 of the 6 teams. So obviously people didn't borrow enough money. My guess is they didn't borrow adequate amounts in the short term, where it probably would have made some sense. We'll have to see what the cause of those were, of those emergency loans. Typically it's inventory. I mean, that's my first when I see an emergency loan like that, especially third round or so. My immediate assumption is that it's probably an inventory, that we just didn't sell the inventory that we expected to. Okay. Depreciation, I kind of like to start looking at depreciation a little bit and see what the separation is, because depreciation denotes plant improvements over time, basically, and Baldwin's got a lot of depreciation. Okay, Erie next, and followed by Ferris, and so you see teams there that have invested up to this point at least reasonable sums of money in plant improvements, and that's why their depreciation is a little bit higher. I might expect their interest to be a little bit higher too when I get down there, because assuming that they've maybe had to borrow some money to make those improvements, maybe not. Okay. Yeah, anything. Yeah, let's come down and look at inventory. So huge negative for Andrews, but an even bigger negative cash flow wise for Team Baldwin, right? So they had a huge increase in inventory is what that means, right? When you see a decrease in the cash flow up here, that means they had a huge increase in inventory. And we can see that if we come down and look at their balance sheet, right? Inventory of 42 million. So they had a huge increase in inventory. Chester did a nice job. They ran off a little inventory. Digby, that's fine. You know, that's a little bit of an increase. That's maybe as we're growing along, that probably to be expected, not a bad deal. Erie had a pretty big increase in inventory. And again, if you look at the teams, with the exception of Chester, it's a little bit surprising then that Team Chester, Tony had he had a decrease in inventory and yet required an emergency loan of 19 million. So that's a little bit maybe didn't take into consideration. I don't know. Retired some early debt or long-term debt. And there again, maybe that's one of those decisions. I wonder if that was planned or not. But he paid off $20 million in long-term debt and then ended up having a $19 million deal. So figure the interest rates stay the same, but he's got that fee. How much is the fee for an emergency loan?
7.2%.
Yeah, 7.5, something like that. So you know, on 20 million, I mean, there's $1.5 million that got spent just by making that decision. So that's a pretty big chunk of change. I think most of us would be happy with $1.5 million if we could save that or do something with it. So I think I would. I'm pretty sure I would be. So cash, we're not sitting on a lot of cash except Team Digby, our computer team, and Team Ferris is sitting pretty good. That's not bad cash management there, right? You want to have some, okay? I mean, is it nice to have 5 or 10 million? Yeah, maybe. 16 million is not bad. It's a little cushion. That's fine. Okay, it's way better than getting an emergency loan and getting dinged for an emergency loan, no doubt about it. So accounts receivable, inventory, we kind of talked about up above, and you can see it up above, but you see some, that's quite a bit of inventory. Again, something to keep in mind as you're making your forecasts for next year, right? And I don't know if folks are going through and doing the math on some of these categories, especially, you know, and I know that's been one of your problems that I give you guys periodically is, you know, what's the demand for next year? What's the inventory on hand? You know, what actually needs to get made? But that's a lot of inventory, you know, 84, 110, 135, 160, $170 million in inventory overall between all the teams. So that's quite a bit of inventory for third round. So plant and equipment, Baldwin's big. You know, we saw that with the depreciation, and so our expectation would be that they would show a bigger plant down here because they got more depreciation, and Erie and Ferris pretty good sized as well. So they've been making some investments, obviously, and some plant improvements. I think Baldwin's case, it might be kind of interesting because I think they're also, no, it's Ferris that's getting rid of a couple of products. It looks like, yeah. So it's not Baldwin, it's Ferris, I'm sorry. Total equity, you know, the teams are, you know, relatively close. Digby's the biggest, Chester being the smallest. You know, the other ones are pretty well, you know, bunched up there. Erie's on the smaller side, though, okay, which, again, being smaller on the total equity side allows you to get a greater ROE, right? You're probably taking on some risk. You probably got a little more leverage. You probably have a few of those things going on. But it should also lead, if you're profitable, to a higher ROE as a result. So it absolutely leads to a higher ROE. I shouldn't be equivocal about that. So depreciation we talked about up above. Variable costs we're not concerned about because we want to look at the contribution margin. SG&A, look at that, 30 million and 27 million for Erie. So we see some huge investments. We kind of saw that start right away in round one where a couple teams, I thought Andrews was kind of leading that parade a little bit to start with, and then this round their SG&A dropped to 3.8 million. So a little bit of a, was that a mistake or was that purposeful? Purposeful? Okay, interesting. Okay. We'll see how that plays out. they were profitable this round, okay, and at least in part because of the small SG&A, right? If you'd added 6%, say, to their SG&A, it probably would have turned them not profitable. I guess I'd have to look at that, but we could. That might be a good problem, you know, at what level of SG&A. But that's not a good analysis, really, because you would also have to assume that if they invested more in SG&A, it would have driven sales higher too, though, right? So you can't do that analysis. That would be a poor analysis to do, because any investment in SGA would probably have the effect, it should have the effect of increasing some sales, right? At least on a nominal basis, and so you should be increasing sales. So you couldn't do that analysis and come up with a good answer.
Yeah, I've noticed that it doesn't always work. You can have high accessibility and spend all that money, and then all of a sudden you don't sell anything. So I noticed that on the last one.
Well, and I'll remind you that it's everything together. Yeah, it's if you're here's the main point on that. If you're matched up on the buying criteria with another team, and you spend more in marketing, you're going to benefit. Okay, that's just a pure and simple exercise there. You're marketing up to a certain point. I mean, if you're spending $5 million per product, that may be too much. I'm not sure. 10 million might be too much, you know. But if it will definitely enhance your sales. You know, at some point in time, you get the law of diminishing returns in there. There's no doubt about that. But yeah, if you're equal in terms of the buying criteria, in other words, your product is exactly the same in terms of its positioning, its price, its what are the other ones up there? MTBF and age. And you guys were exact. The team that spends the more on marketing is going to sell more, and it's probably going to be a benefit profit-wise. Okay, unless, like I said, you get up to that diminishing returns, and where that diminishing returns is, I don't know. Yeah. I think that diminishing returns probably depends on what the other teams are doing. So I don't know, again, if that's something that you could. Yeah, that you could put a pencil to and say, oh, it's right here. You know, 3.6 million is what you ought to spend. I don't know if there's an accurate point there. So, interest. We see some interest that's pretty good size. Baldwin again. You know, they had a lot of depreciation and a lot of interest, like we expected, because they had a much bigger. They got a much bigger plant, but they also had a big emergency loan, right? Yeah, they had a huge. What was your guys' 40-some million emergency loan? Ouch. Yeah, we were saying up here with the extra fee and your normal interest, you know, you figure 20% roughly. I mean, that's maybe not accurate, but figure roughly 20%. So that's a $9 million hit. Okay, for Baldwin, that's pre-tax, of course. So you do get the tax benefit of the debt of the interest. So, you know, you save 35% of that basically. Okay, but obviously, why Baldwin had a small loss. Okay, I mean, without the emergency loan, if they'd have borrowed that money on a short-term basis, they'd have saved the 7.5%, which would have been 3 or 4 million. Okay, just off the top of my head, somewhere through about 3.5. Cool. Okay, down we go. We see we're starting to use up a little bit of capacity. Team Erie, especially, using up capacity. So we'll see if that pays off in the long term. Again, some of those things are invisible. You know, Baldwin's using a decent amount of capacity. Ferris, you know, they had a good profit though, and they still have far more capacity than production there. So, see, whew, that gets to be small print. I didn't bring my glasses either, so Lord Almighty. Hope you guys can see this, but. Boy, we do see some movement, you know, and we looked above and we saw some of the numbers here. We see in terms of Team Baldwin, for example, you know, some pretty good numbers here in the automation, and also some pretty good numbers here. You'd have to go back and look at last round, but there's no surprise that they've invested quite a bit in some capacity increases and also some automation increases. Looks like Team Andrews, not a lot in automation, a little bit, coming down in their capacity in the high, or in the performance and size categories anyhow, and in the high, sorry, so a little reduction there. And we saw Team Ferris, you know, basically getting rid of their performance and size. and yet introducing a new high-end product. So we should all know Team Ferris is probably, I hate, not to pick on you guys, but I'm not picking on you in a negative way, but they should be pretty easy to tell what their strategy is at this point in time. Okay, again, looking at the perceptual map or even just looking at the numbers, you should be able to have a pretty good idea what their strategy is. Okay, third round, yeah, we should know most of the team strategies actually by the third round. Inventories, look at that though. Team Andrews, huge inventories in the low-end traditional. Baldwin, on the other hand, sold out of their low-end traditional. So, what's the differences there? Okay, that would be extremely important to know. That might be a case. Let's go look at let's just skip down. So traditional, Baldwin sold a bunch. Andrews, Baldwin had a potential for 22%, sold about 20%. Andrews about half, okay, about half the potential. So Team Baldwin, here we go. Traditional segment, what was I comparing it to? Team Erie, or Team Andrews, I'm sorry. So Abel, fairly close in performance and size. Price, actually Baldwin was a little bit more expensive. Okay, so that's a bit of a surprise. Baldwin, you could argue, age-wise, isn't 2 the ideal age? Yeah. I'd actually argue that in this case Andrews had a better age profile, because closer to 2. Because they revised here in September, and now they're right at 2.17. So that's a pretty good age profile. They're closer to the 2 probably throughout the year than Team Baker. So Andrews had a better price, a better age profile, actually a little better performance and size, although they weren't ideal. They're a little bit ahead maybe on the performance and size, so that might have been a little bit of a negative. MTBFs are the same. So what's the difference? Okay, I mean, here's a case where you look at the 2 products that were very, very similar, and your difference then is that Team Baldwin spent $5.2 million in marketing, and Team Andrews spent 0 in marketing, right? Team Andrews had spent a lot the round before, and so they had a lot of carryover. There's no question that there's some of that carryover that you get both in awareness, right? What do you lose in awareness? You just lose 1/3. Okay, so they were obviously, at like 100% awareness last round, and they lost 1/3, so it took them down to 67%.
I think we're 80-something.
Okay.
Is it a third?
I think it's 1/3 that you lose, isn't it?
What is it, higher?
What?
Maybe it's 30%, something. Yeah.
Did you lose on what?
Yes, are you probably?
Hiram's leaving, so it's all right.
Sorry, I was looking at other stuff. Oh, like every year, yeah, it goes down, yeah, like 30%. It's a lot.
Yep. So, bingo, there's where marketing definitely paid off, right? Okay. Doubled the sales. You're looking at 2 similar products, and yet you're seeing a doubling in sales. Now, they spent $5 million to get that. Okay. So that's a big chunk of change. You could do the math there and ask, did the $5 million, was that worthwhile? You'd have to do the math. You'd have to go through and take your price times your deal, subtract out your variable costs, and then take a look at that marketing cost and see if that was actually worth it. But the other thing, again, that analysis is a good analysis. That one's good to do. What you neglect in that is what the carryover effect's going to be, okay? Because Baldwin's going to enter next year also with a bit of an advantage, right? They'll absolutely enter next year with an advantage, and that carryover effect's a little harder to quantify. Okay, so you could figure it for this year and see exactly what it did, but if they were even if you came out and you said, well, that's even, then you'd have to say Baldwin still wins because they're going to have a carryover effect that Andrews will not have. Okay, so just some things to kind of look at there when you guys are going through it, and I would guess the same's probably true in the low end. Chester, just kind of a little inventory all around, and Digby and Andrews. Ferris did look at that, beautiful job with their inventory. Ran out on the traditional. I don't know if they had lots of potential there. We'll have to take a look maybe when we get down there and see. A little bit more on the low end than what you'd like. Okay, but otherwise, boy, that's just beautiful. double-digit numbers there that say you hit it just about right because you served your customers what they wanted and you had a little bit of inventory left over, but not so much, and you didn't have any stock outs. So that's pretty good. Okay, that if anything, when we look at your profit and those types of things, that's probably as important as anything you did was just having that inventory come in just about perfect. So I was picking on you a little bit earlier. Now I give you a good compliment there. How's that? I wasn't really picking on you. I just said we could probably see what your guys' strategy is. You see some good numbers here, in some of these contribution margins already. Here's one I found interesting. I glanced at this, began with Team Ferris, and they introduced a new product in the high end, and boom, introduced it at a 50% contribution margin. Wow, that's big. Okay, it's a new product. It's sold well. Again, very little inventory. Just perfect inventory, really. You want just a few left in there. Part of the reason for that was they introduced this thing with 8 on the automation side. So they spent a lot of money. There's no question. It'd be interesting to go back. They would know, but it'd be interesting to go see exactly how many dollars they had to spend to get this product prepared for the market. But it had to be quite a bit to come in with that kind of automation and whatnot. So, okay. And the positioning of it, the R&D that they had to spend would have been pretty pricey. So, just glancing at a couple other things. I had a chance this morning to look through it a little bit, but not as much as I'd like to. So, in the traditional segment, Baldwin kind of dominated there, pretty good. They could have sold another couple percent, not a big deal. They didn't give up a lot there. They gave up a little bit, and the other teams did pretty well spread out, so it wasn't like any one team took advantage of that. Erie had the best, but not by a lot. I guess Baldwin, I said, dominated or had the best, but they didn't. Erie actually had the highest sales. Baldwin should have had the highest sales, so just a couple percent difference there, but not a lot. So Baldwin sold out. Could have sold a little bit more, but no big deal. Spent a ton of money. Okay, look at that. As did Erie, though, too. Right? Both teams spent a lot of money in the marketing side, and so compare that to some of these other products, and you'd have to say the marketing certainly made a difference. We kind of did that earlier. In the low end, Erie dominated, but could have dominated even more. Okay, what team really took advantage? Baldwin could have sold more, and other than that, the other 4 teams kind of got to take advantage of that a little bit. So Team Baldwin and Team Erie left a little bit on the table there. Okay, Erie especially 5%. It looks like right about 5%. So again, you do your math. That's 600,000. Units that they could have sold at $20 a unit or thereabouts, $18 a unit, so whatever that equals, about $10 million probably in sales that they gave up there. And their contribution margin is pretty high in the low end, isn't it? 40 some? Yeah, so you figure, they gave up $4 million in before tax profit, somewhere around there. I mean, that's really doing it rough off the top of my head, or back of the napkin, I guess, as they used to say. So, question, Taylor, or are we just fixing your sleeve?
I was fixing my sleeve.
Okay. No worries. Yeah, interesting. They had a revision date of 1/15 of 19, although that didn't change the age. What kind of changes were you guys, MTBFs?
Now you're asking for insider secrets, Byron.
Yeah, I'd have to go back and check on that myself, because they're making some changes that are kind of changing the revision date, but not changing the age profile. And I don't know if that's MTBF. They have changed their MTBF a little bit. You can see in the low end.
That'd be a good assignment question.
Might be. Yeah. Andrews, interestingly, has a high MTBF. Towards the high end on that, even though it really is meaningless. What's that do? What's every 1,000 points of? It adds to what? Material cost. Yeah, 30 cents. Okay, 30 cents, I think, if I remember right, to your material. Every 1,000 points of MTBF adds 30 cents. So you should have a difference there of about 90 cents in material cost between Andrews and Erie. And on 3.5 million units, 90 cents is significant, right? $3 million worth. So high end, look at that. A lot of teams competing. Every team's competing. We didn't see that in the practice rounds. We saw, teams kind of falling away a little bit maybe in the high end, and you can see some competition going here. Although there's a cluster out here in front and then a cluster here in the middle. Didn't seem to really affect the potential too much. There's a gap there, but it's not a huge gap really when you break it down. Theirs was over 18 and theirs was 13, so about a 5% difference in the potential. Not a ton really. And I got to look at the bigger. I can't really make out the team names there and whatnot, but we'll have to look at the bigger picture and see. High end, this is where Team Ferris introduced the new one. We'll have to see where it came in at. Again, I can't see it here in this little bit too small. We'll be able to see it in the bigger perceptual map. Nobody ran out, so everybody had inventory left over in the high end. Yeah, everybody had some inventory left over in the high end. I don't know if it was a bunch. You'd have to take a look and see. I know Team Ferris didn't have a bunch. I don't know about some of the other teams. We'll go up and take a quick look. High end, I didn't think there was a ton. Not that much, a little bit. High. Team Baldwin had a lot of inventory left over. Why did Team Baldwin have a lot of inventory left over in the high performance and size? And there's my question: was that purposeful or was that a mistake for Team Baldwin? Do you guys know why? You think you know why? Change. Yeah, you and Erie both had a price that was 50 cents outside the range, and Team Chester had a price that was $1 outside the range, actually. And still it was there, but there's something else that Team Baldwin did that had...
Their performance coordinates?
Their coordinates are off. There's a reason their coordinates are off. Anybody see that? You're absolutely right that that's what caused the sales to be less. No question about that. They revised it too far out. Okay, and so the revision didn't take place, meaning that their coordinates, okay. Yeah, see, they're into 2020. Okay. Well, they did the same thing in the practice round, so I thought that they would have picked up on that. Now, little technical error?
Yeah, don't worry about it.
Well, that's why I was wondering if it was purposeful, because we'll expect those products to jump forward.
There's a little dyslexia going on.
Ah.
We're good. Our coordinates are. Just don't worry about it. We're good.
Okay. Okay. It happened in the high performance end size though. And they spent a lot of money, and that allowed their sales to stay up there because they weren't that far back. And they are going to revise next year, so I'm going to be kind of anxious to see what happens for those high-end products, high performance and size, all for Team Baldwin. And remember up above, they spent a lot of money on capacity there too. So expectations are maybe that they're going to compete pretty aggressively up there. That's my guess, is that they got aggressive on the positioning there and didn't take note of the date, but who knows? Yeah, that's this is what kind of killed them here. Okay, the performance and size certainly, but then also the age, because it didn't revise this past year, and so the age profile didn't go down. That's going to change next year, but it won't change until mid-year. It won't change until June, and so they'll have, they're going to have to maybe adjust their sales forecast a little bit because of that, I would think. So, same thing happened here in the performance. They still one of the dominant teams, but my guess is, like the other, they probably spent a lot of money, and they did. Okay, their age profile's a little bit off. It's going to change in April, so not as bad, right? That'll change in April. Assuming, hopefully, that means it's going to move that product forward up to get a better positioning profile. And size, we got Digby and Erie. Team Ferris, as we know, in size and performance both has kind of been just getting out of the market a little bit. That's fine. Part of their strategy, obviously. Yet they still sold a few, made a few bucks. Actual and potential there. Here's the map, yeah. So up here in the performance one, you see really good competition going there in terms of being out on the front edge. In the high end, not so much. Where's your guys' new one? Ferris. How come I can't? Is that it right there? Right in the middle? Okay. It's just right there with those other ones, and I don't have my glasses. I can't see it, but yeah. So it's not just my eyes? Good, okay. It's a little surprising that it wasn't, brought right out here to the front edge, but it sold just fine, right? And new products are going to sell fine, okay? They get a little bump, just because they're new. It looks like Baldwin and Andrews, are kind of hanging towards the middle of these spots a little bit. We'll see. Baldwin, again, we know because it just didn't move, because they'd gotten a little bit aggressive, it looks like, in their positioning maybe. We got some HR going on, a little more than we had in the practice rounds. In fact, Team Digby, our computer team, is the only one that's not engaging. But every other team is making a real effort to help control their labor costs by investing some money in HR, cutting down, making their labor force more productive, which should allow them to have fewer employees. Okay, save some money. They got those little robots running around in their factory doing a lot of the work now, which, it's too bad you got to lay some people off, but you got to make money. You got to keep the shareholders happy first. So. Or else they're going to pull the money. Any questions about the round other than who won, which we'll take a look at? There's definitely some discounts going on, okay, because we had some emergency loans and some things like that. So I don't know that the winner is necessarily obvious. Thank you. We'll see. Well, maybe this is going to work. Didn't we have problems with this 2 weeks ago? I couldn't get this thing to come up, and I don't know what the heck. I think I might have left it open on my computer, but usually it'll still pop right up and tell me it's a read on, and let's try it again, see what happens here.
Do you know who won?
I do. Yes, I do, as a matter of fact. So
at the very least, you can give us a little spoiler.
At the very least, I can tell you who was the victor here. Gosh, my computer, my little round thing there is on my cursor, just going round and round. So it's not wanting to access that or something. I'm going to try closing it and reopening it and see if that helps here. Come on, baby. Come on, sweetheart. Let's go. Give you a little talking to you.
You just have to have patience.
I don't have much patience, so. Okay. While we're being patient, I will make an announcement. If any, especially for those of you that have kids, if any, and or if you know of people that have kids, if you want to have some fun Thursday evening at 6 o'clock at Saddle Butte Custom Smoking. We dye 3,000 Easter eggs. And don't be late because we get done in usually less than a half an hour, believe it or not. So it's a lot of fun. I warn you, if you have kids, they're going to be black up to their elbows when they're all done dyeing the Easter eggs, but it comes off, right? Over time, it'll dissipate and it'll come off. And then the Easter egg hunt or roll or whatever you want to call it is Sunday at 1 o'clock at the Optimist Park, and any kids age 0 to 9 are welcome to come to that. That. You have a kid age 0? Well, because they don't turn 1 until their first birthday, you see. And so it'd be a newborn would be eligible. They could come up and gather eggs if they wanted to.
How's a newborn going to gather eggs?
It's going to be really
Do you think
difficult.
It's going to be a little cold for a newborn gathering eggs?
But there's advanced children nowadays, that are really, So I don't.
What are you going to do? Put a stick next and tell them they need to be hunting?
The gather last year was a really cold, windy, and horrible year for the egg hunt, actually, and so it took a lot longer than normal, and yet they were all done gathering all the eggs in about 3 minutes. So, again, you don't want to be late, for the egg gathering because they're just like this human vacuum. It's kind of fun. But you go up above on Optimus Park, you can kind of park up there, watch them. It's just like this human vacuum cleaner that goes across the thing. It's unbelievable. It's not liking me today. And I was patient.
Yeah, I saw that.
Okay, thank you. So I might just have to break the news to you, and then of course we'll send this out. And that way I can get in here and fix that Compex M so that you guys can get into that and get going on it. The winner was, for round 3, Team Ferris, yes. So even with, low sales really, okay, which tells you, again, I think I've said that from the beginning. You don't necessarily have to be a big company. You don't necessarily have to have the highest sales. You don't even necessarily need to be the most profitable. Okay, there's a lot of other management things that go into this game that can help you to be victorious and be successful. Okay, besides just pushing sales and profits, say. So, yeah. So congratulations to Team Ferris. And since this thing's not going to come up and work, I'm just going to exit out and go to work on fixing that Compex M thing. So